So there is good news for establishments and workers. In a first since 1997, Modi government has slashed the rate of contribution to the employees' state insurance from 6.5% to 4%, effective from the 1st of July 2019. So what is ESI and why is this decision by the government important? Let's take a look. ESI is a social security and health insurance scheme that aims to protect the employees in the organized sector socially against the events of sickness, maternity, disablement, and death due to employment-related injury, and to provide medical care to the insured employees and their families. It is a self-financing scheme managed by the Employees State Insurance Corporation according to the ESI Act 1948. So here, the funds are primarily built out of contribution from employers and employees payable monthly at a fixed percentage of wages paid. The ESI Act applies to organizations, shops, hotels, cinema theatres, road motor transport establishments, your newspapers, your private educational institutions, medical institutions, where there are 10 or more employees drawing a salary of up to Rs 21,000. The wage ceiling of coverage was also enhanced from Rs 15,000 per month to 21,000 in 2016. From its inception, the ESI scheme was criticized often for not being efficient and for crippling the ease of doing business. Manish Sabharwal of Team Lease Services had to call the ESI the world's most expensive health insurance program. Less than 50% of contributions are paid out as benefits. Until now, the employer had to contribute 4.75% of the total monthly salary payable to the employee, whereas the employer needs to contribute only 1.75% of his monthly salary every month of the year. Higher contribution rates of employers had earlier resulted in massive underreporting of low-wage employment. But with the new decision, the Modi government has begun fixing this broken scheme by slashing the employees' contribution down to just 0.75% of their salary, while the employers' contribution will be 3.25% without any changes in the benefits offered under the scheme. For workers, this came as a relief as they would get a higher take-home salary. For the employers, this move will reduce their financial liability and lead to an enhanced ease of doing business. The government, on the other hand, expects more formalization of the workforce, especially for low-wage employment and improved compliance of law by firms. According to the government, this decision is likely to benefit 3.6 crore employees and 12.85 lakh employers of the country. Experts also suggest that a reduction in the contribution rate for employers would result in annual savings of over Rs 5,000 crore to these firms. There are also reports suggesting that the government plans to merge the ESI with its flagship Pradhan Mantri Jan Arogya Yojana, also known as Ayushman Bharat, which will further make life easier for the beneficiaries. The healthcare coverage for beneficiaries will also expand as a result, since medical institutions under Ayushman Bharat will be far greater than just the ESI designated ones. Labor reforms are critical for improving the ease of doing business and tackling the employment problem. The current reduction in the ESI rates is seen as a good step in that direction. Do subscribe to our YouTube channel to watch a lot more of these explainers.